You're listening to the Tribe Nail Tech podcast, where nail techs find inspiration and motivation to take their career to the next level. We welcome you here. Now tribe up and slay your day. Here is your host, Becky Bunnell.
Hi, everyone. Welcome to this episode of the Tribe Nail Tech podcast. I'm your host, Becky Bunnell, and today's episode is sponsored by Sogel Nails. Don't forget to go to sogelnails.com/contest to enter for today's product giveaway. So, oh my goodness, today, you guys, I have a special guest with me. This is Ben Smith, and he is from eTrends Group, and he is a CPA and all that stuff with the dreaded tax stuff that I dread so much. I'm here to tell you, it's 27 years in the industry, and I haven't learned my lesson yet. Let me give you a little bit about kind of how my tax stuff goes every year. My appointment book is my life, and of course, I write down what clients give me, what money. If I sell any product, it all goes in here. This is just my lifeline. And then what do I do every single year when it's tax time? I mark out 2 days and I sit at my kitchen table and I have this huge mess and I have a bin full of receipts. And I know my numbers as far as income coming in. I know what I make every week. I tally it every week, every month. And then, so that part's easy. My big problem is I have all these receipts and I don't do it monthly or weekly. And every year my husband says, honey, so this year, are you going to get organized and do it monthly? I'm like, yeah. And I never do it. And I just feel like I'm going by the seat of my pants every single year. Then I take all of my totals to my tax man and there I have it. But Ben is an expert at this. So I thought it would be a great time to bring him on since here it is, it's January. And I'm hoping to start some new habits and get some good information from Ben today since he's got the 411 on all the tax stuff. So Ben, welcome. How about give us a little bit of intro about yourself? What do you do? How long have you been doing this? Tell us where you're at.
All right. Yeah. Well, thank you, Becky. I've been doing this a long time. I've been in the finance world since I guess you could say 1999. So for a while now.
For a while.
I started out actually in the Army doing Army finance, paying people and all that, and eventually got a degree in accounting and a master's in taxation and CFO of a construction company, and then landed in public accounting in 2007. But been doing taxes and public accounting since 2007.
Nice.
That's really what I specialize in. I specialize in advanced tax planning. So, our clients generally have intractable tax problems they just can't overcome. And by intractable tax problem, we really just mean they think they pay too much tax all the time. And they want to find a way to pay a lot less. So that's what we work on. We work on structure mostly. So, certainly we do things like we're going to do today. We give kind of one-time tax tips that help reduce tax liability for today. But really, the most effective planning is structural planning. It's planning where we look way out in the future and we say, okay, this is where you are from a tax structure today. How can we get you to a point where you are just earning money in a much more tax efficient way so that we can, reduce your tax liabilities in the long term. All right. That's really what I specialize in. I have a big family and I live in St. George, so
yeah,
not far from you, and it's great.
Rainy and snowy today, which is kind of unusual for us, but
yeah, I woke up and had to put on a jacket. I'm still wearing it. It's nasty out there today.
We're not used to that. It's cold today. It's supposed to be all day long, but I really appreciate you being here. I know a lot of us, obviously I'm in the nail industry, and I have some questions for you, and then, maybe you can help with some different things too. But one thing I think that kind of, we're always trying to find the most deductions, obviously, but then I've also heard too, it's like, hey, if you're in business every year and every single year you're getting money back and you're never having to really pay a whole bunch in, it's like, are you really being profitable? So we do want to be profitable, right? We want to be making money. So paying taxes isn't a bad thing, But I think sometimes too, we're missing some things that we could be doing. Or let's say at the end of the year, all of a sudden we've got to pay this amount and we're like, okay, where am I going to get this money? Like, what percentage should we be putting aside every month of our income so that at the end of the year, it's not this big surprise, this big burden, this shock that it's like, now what do? I don't have that money. I think, we don't think, like you said, long term for the end of the year, we're just enjoying the money or this or that. But what percent typically should somebody be putting aside?
Yeah. Yeah, that's a great question. It's a real big, broad question. And the best answer to that is, sadly, it depends.
Yeah.
It depends on how much you make, and it depends on how you make it. All right. But I understand that's not very helpful. So generally, as a big, huge, painting with a big brush here, if you're putting away 20% of your net income, right, that's after expenses, you're probably going to be okay. Most nail techs are going to be okay putting away 20% of their income. However, if we structure you correctly, we could probably get away with less. We could probably reduce that. And so most nail techs are doing business as they're sole proprietors, right?
Mm-hmm.
They're filing their taxes on their individual income tax return on a Schedule C. And that's fine. It's easy. It's an easy way to be in business. And that's the advantage of it. But there's some disadvantages, and one's taxes. Nail techs pay self-employment tax on every dollar of net income, right? That's 15% before they get to their income taxes.
Right.
And I know that most nail techs are, you're probably not distinguishing the two because they're both paid on the income tax form on the 1040, right? You file the 1040 and you've got a bottom line, and that's what most people care about, right? The bottom line. But the truth is that bottom line is made up of income tax and it's made up of self-employment tax, two different taxes collected on the same form. So we can actually, for a lot of your audience, we could reduce, or they could reduce their tax liabilities just by opting to operate maybe as a S corp, for instance, as opposed to a sole proprietor. And by doing that, maybe instead of putting away 20%, maybe they're only putting away 15 or 10% for taxes. So there are ways to save money.
So it's probably a really smart thing to have an accountant, a CPA. So what do you do? So if you are, say you work with a client, they bring you their stuff every month. Like you said, you talk about structure a lot. So what do you do for a client? Because I've never had that. I just, like I said, I take care of everything myself at the end of the year. I take it all to him and he just, I just give him and he plugs in the numbers. Sure. So I'm probably missing a lot of things. I'm probably, who knows if I'm even doing it right, but for 27 years, it's done me good so far.
Well, yeah, doing taxes right just means abiding by the law, really. So right. The question is whether you're paying as little as you can. And probably not. Most people aren't. Most people are paying more tax than they need to pay. But yeah, so is life. What can I do? We can offer a wide variety of services, right? And depending on what a client needs, it will depend on what we offer them. But we can go anywhere from do everything, right? We can do bookkeeping for a client and do their financial statements every month so that they have those. We can do CFO services, so we can consult on business direction and management on the management side of a business. Probably most of your audience doesn't need that. Some might, so some of the more successful nail techs who are doing really, really well and, maybe have employees and not just themselves, they might need that. And we can just simply do tax returns for you. We can simply do some tax planning at year end and do tax returns. So we have a wide variety of services we can offer. The best thing a person like you could do, you've got your logbook and that's where you've got everything. And it's a pain for you, right? That chore, the chore of turning your logbook into, like a net income number is a big chore, and you dread it. Yeah. So the best thing that someone like you can do, I'll give you two recommendations. The first is the cheap recommendation, and that is and you said, your husband says, when are you going to do it monthly? I would say monthly is even too big. Because even monthly, it's a big chore.
Yeah.
It's something that is just, it's dreadful. And it's going to take you some hours, and it's just, you don't want to do it. What I would say is maybe do it weekly. Set aside 1 hour in a week.
Right.
Right. Now, 1 hour, most of us can endure a little pain for 1 hour.
Yes.
Right. It's not a full day exercise. And so that's what I would recommend. First off, someone like you, set aside 1 hour, so set on Friday or whatever, and go ahead and do that week's bookkeeping. Add up all your expenses, add up all your revenue, etc. Make sure you have logs of your mileage, etc.
Yes.
And do it weekly. That way, there's a couple great things. One, what you make now on a weekly basis, right? So you can budget easier, right? When you're going to the grocery store, when you're living, you can budget easier. You know what you made last week. You will know what you make this week on Friday. So that's easier. And of course, it's not this like week long or day long, whatever process of hell, I should say, because that's really what it is.
2 to 3 days for me. Now, I'm not very tech savvy. And I know that there's an easier way, but is there a great app or what do you recommend that a normal, not complicated person like me that's not tech savvy, a computer system or something what do you recommend is the best one, easiest to use to put everything in there?
Yeah.
Make it easier.
Right. So for me, I think the best thing for one of the easiest programs and a program that's robust enough to actually give you information that's useful to be useful is just maybe a QuickBooks Self-Employed online program, right? So QuickBooks Online, not too expensive. I don't remember I think I can get a discount for $20 or something. It's like $20 a month. But for that, you're going to have an app, right? You're going to be able to scan. So now instead of collecting receipts, you just scan your receipt, with your phone, right? Take a picture of your receipt with your phone. So you buy something and you don't have a shoebox anymore. You just throw that receipt in the garbage.
So there's a better way.
Right. You're right. It collects it right there. If you spend another 5 seconds, you can answer a few questions about the receipt, the date and what it was for. And now your bookkeeping, or at least your expense tracking, is done in real time. Yeah. And you never have that hour once a week or the 3 hours every year, whatever. You never have that. You keep track of it all in real time. That's probably a better answer. And again, when you're doing that, now you don't even have to wait till weekend to know what you made. Right? You can look on your phone any time of day, anytime, and say, okay, well, I've made X amount of dollars this year, or I've made X number of dollars this month, or I've made X number of dollars this week, right? Whatever period you want to look at, you can very quickly see the results that you're getting, which, by the way, is really good. There are many people, you said it at the beginning, you want to make money.
Right.
And you know what? There are a lot of small business people who think they make money and they actually don't.
Right.
And so by doing this, you might very quickly find, wait a second, I don't actually make any money.
Right.
I work a lot and I don't make any money. And then, of course, that gives you great choices in your life. You can say, okay, well, how do I change it? Either I can keep doing what I'm doing, but how do I change it so I make money? Or maybe you're one of the few people who says, you know what, shoot, if I ain't making money, why am I doing this? I'll do something else.
And I talk about that a lot. Is like, it's so important to know our numbers, because I find I mentor a lot of nail techs in the industry, and far too many of them aren't charging what they should be charging. And like you said, they think they're making money because they're like, whoa, I have cash every day and I'm making this on every client. But you break it down by the hours it takes you to do that client, your products, your overhead, your insurance, your rent, everything, because there's more than just table costs, there's overhead costs, and people don't know the numbers. And
there's time.
And time.
I mean, you might cover all your costs.
Right.
But what about the cost for your labor? If in the end you have $1 left for every hour you work, is that worth it? Because that's a whole lot less than minimum wage.
Exactly. And I feel like a lot of people are making either less or they're making minimum wage. Why are you self-employed in the industry if you wanted to just make minimum wage? There's an easier way. Just go get you a minimum wage job,
Exactly.
and not have
Exactly.
to worry about all this. So I think it's important and to set those goals. If you're knowing what you're making every week too, you kind of can set those goals as like, okay, well, I need to make this much this week to meet my monthly goal that I want to make, or my yearly goal. We break that down and back it all up. And it helps to push you more to that, maybe you're selling retail, but to that next client, it's like, okay, I need to make $100 more. Got to make them $100 more. What am I going to sell that person today? So I
Yeah,
just
right.
think it really helps to know the numbers. And
Yeah, numbers
great.
have a way of smacking us in the face when we really
Right.
get the real numbers, because otherwise, when we don't have them, they're all disconnected.
Right.
Right. The income's disconnected. We get it at one time, and every time you get it, you get a dopamine hit in your head, and you're like, wow, feels great. I got all this little cash.
Yes.
But it's not connected with the rent, that booth rent you paid. And it's not connected with your insurance that you paid once a month, because they didn't happen at the same time. You didn't get the cash and say, oh, here, this much is for that, and this much is no.
Right.
They were disconnected events. And so a good accounting system, even if it's an entry level like QuickBooks Self-Employed, will help connect those expenses in your mind, right? It'll help you see them. So I'd certainly recommend that really to anybody. Let's talk a little taxes.
Okay. Do you want my questions?
You shoot me a question. I think that's probably the best way. I bet you're not the only one with the question.
No. And so here's a few things that I often wonder about, and I don't know, sometimes I get different information. So let's just say, for one, like my vehicle. So my vehicle on the back is plastered with, my business, my phone number, all that. It's advertisement for me. But people say this all the time. If you have that on your car, you can write off, blah, blah, blah. So is there any part of your car you can actually write off for that? Or is it just the actual vinyl that you can write off for putting on the back of your car? Like, I obviously do my mileage anytime I'm going to get supplies. If I'm taking supplies to any other nail techs that are purchasing from me, if I have to drive up to Enterprise and meet with CR for Sojel business, like I know all those things, nail shows, all those things. I'm keeping track of my mileage that way. But the actual car thing, I've heard varying things. So what's the lowdown on that?
So your first question, you're making me out to be the bad guy on the very first question. All right.
It's like, no, you can't.
Yeah. So a vinyl wrap or a magnet advertise, whatever, however you're advertising on your car, that's great. Mm-hmm. But that alone does not meet the IRS threshold for turning everything you do in the car into business.
Right.
All right. You are not a driving advertisement. I mean, you're an advertisement, but that's not sufficient to deduct it. Now, of course, you can deduct the cost of to put that vinyl on. No problem. You get to deduct miles based on the mile itself, meaning what you were doing in the car at the time, right? Where you were going and why. So the issue with deducting miles now turns from let's put a wrap on the car to how do we structure my business to turn almost every mile that I drive into a business mile. So I'd imagine you probably you rent a booth somewhere at a salon. How do you do it?
I own a salon, so I have girls that rent for me. So
okay.
It's an education center also. So I teach, I have supplies for local nail techs also. So I'm kind of a store, an academy, and then I do my clients. So it's just a lot of stuff,
which means that structurally you're into a lot of things, but structurally you're the same as a lot of nail techs. Okay. Yes. Most nail techs are renting a booth or they're in like in your salon.
Yes.
And that's where they're working. At least that's where they're doing nails.
Right.
But that's not the only place they work. And that's the key. A home office in your case, and in the case of most of your audience, will do a lot to increase your business mileage deduction, right? So all you really need for a home office, number one, a lot of people believe, especially in this type of industry, in the nail tech industry, they believe, well, I don't want to do nails at home, so I'm not going to do that. I don't want to invite my clients into my house. That's fine. Some, by the way, do.
Oh, yes.
And that's also okay. The point is, you don't need to invite clients into your home in order to have a home office.
Right.
You can have a home office where you manage the backside of your business, right? It's the place where you do those dreaded books, right? Once a week, right? Now here's the trick there. If that's what you're claiming, if you're saying this is where I do my books, you probably need to do it more than once a year.
Right. Right.
You need to do it regularly. In fact, that's the standard, that you use this space in your home regularly for business. Well, and exclusively, meaning it's the place that's only for business in your home. You don't use it for other things. It's not your living room where you watch TV. It is a set aside place that's your office. And in that place, that's where you manage your business. And of course, what can you be doing? What management activities? Well, of course, you can be doing your bookkeeping. In other words, every single day you could come home and spend 5 minutes in there summarizing your day's activities, recording your mileage logs, etc. You could be in there managing your advertising, right? This could be where you get on the computer and you do your daily Facebook post.
Your social media, which is huge and it takes time. And
right.
Yeah, so do it in your office.
That's right. You go there and you have a regular routine. Maybe it's first thing in the morning. You get up and you go spend 20 minutes in there. You do your social media posts. Maybe you may brainstorm for the next day's post or whatever. Do a little research, whatever. Of course, your accounting. Most nail techs obviously are getting cash at the time of service. But if you have some business, maybe where you're selling product, or maybe where you're selling wholesale and you need to invoice, this is the place where maybe you invoice every, twice a month and you send out your invoices. This is the place where you pay your bills, right? All of your listeners have some bills they get in the mail that are business bills, right?
Yes.
Stack those things up once a month, go in there and pay your bills. So you can do these things and create a home office. And when you do that, now almost every time you leave the house, it's a business trip. Almost every single time, because you're driving between offices. You're going to drive between your home office and your salon. That's a business trip because you just drove between two offices. Okay. Now when you drive between your home and your office, that's not a business trip. That's called commuting.
Right.
And commuting is not deductible. But when you drive between offices, it is deductible. Right? Just like if you had 2 or 3 different salons and you worked, 2 or 3 hours at each salon and you drove around town, hit them all. Yes. That would be deductible. Or if you drove to clients' homes and, and you did like a, at-home services, those would be deductible as well. Well, this is the same thing between offices. Mm-hmm. But also think about it. You're self-employed. Mm-hmm. I know exactly how your life is. Everywhere you go, you're doing something for business. Yes. Right? The problem is when you go there from your home, it's commuting. So if you're at your home and you head from your home to, some supply house or some supply store, you're going to go buy something for business, or you're going from your home to the bank to make a deposit for business, that's commuting because it's your house. But again, if you have a home office, now all of those trips become business trips.
Wow, that's huge.
Yeah.
Yeah, that's a great tip. That is huge because mileage, that adds up. That's nice. Yeah.
It does add up. So you really want to, if you can, I know a lot of you don't have maybe an exclusive place that you can create an office, but if you have the capacity, do it, but don't just make it a sham. Don't just say, I have a place. Make it real. Put a computer in there, put a desk in there, and make your behavior indicate that this is your management office.
Right.
And that way it's totally defensible. It's totally legal and you have no problems.
That's awesome. Right? Great tip. Okay. My next one, which is cell phones. And I feel like it kind of changed over the last year or two, but I can't remember exactly. But obviously with today's day and age, all my clients, they're texting me, they're calling me for their appointments. I have a scheduling app. Everything is done on these phones nowadays. It's like a mini computer. So are our monthly phone expense deductible for being self-employed?
Yes. Yep. Okay. That's an easy one.
What about purchasing the phone?
Absolutely.
So I need to upgrade and I need to buy a new phone.
Yep.
That purchase of a new phone is also tax deductible.
Correct.
Okay.
Yep.
That one was easy. Okay. This is another one that can be, I don't know. So clothes. Obviously, if you're wearing a uniform, yes. If you're wearing an apron or whatever to do, some nail techs wear aprons, but what about clothes? Like I said, I'm an instructor, so I like to more dress up every day. Is there an amount of clothes that I could claim that way?
The answer to that is probably not, but I'll tell you the rule. The rule is simply this: clothing that is not appropriate for everyday wear is deductible. Now, how do they define that? And
Yeah.
I always get, maybe I shouldn't say it. I'm going to say it. I always have kind of an off color way of describing this to people to help them visualize it. All right. If you're in the sex industry and you're buying clothing that you can't wear to your kid's school, and you can't wear to public, you can't go out and go to dinner in this clothing, then that clothing is deductible. Okay. Because it's inappropriate for everyday wear.
Right.
Right. But if you're buying blue jeans and t-shirts, you can't deduct blue jeans and t-shirts because, and this is a funny rule because it really has to do with culture.
Yeah.
Right. But blue jeans and t-shirts are acceptable for everyday wear in our society. You can wear them to anywhere you want. And so you can't deduct them. But it's more practical. I know none of you are in the sex industry, so that wasn't very practical, but it is a way to conceptualize it. Steel-toed boots for a construction guy.
Always
we
right.
consider those not appropriate for everyday wear. Why? I don't know. You can technically wear them, but most people don't wear steel-toed boots to eat, right? They don't wear them. So we say they're deductible. Hard hats, they're deductible because it's not socially acceptable, I guess, to wear a hard hat around town. That's deductible. Uniforms, this is an interesting one. Uniforms are a maybe. So for instance, if, my son works at Chick-fil-A, right? And, he just has a polo, has a Chick-fil-A logo on it. He wears some slacks there. Both of those things are perfectly acceptable for everyday wear. You can wear slacks anywhere and you can wear a polo anywhere. It doesn't matter if it has the Chick-fil-A logo on it. So they're acceptable for everyday wear. In his case, he didn't have to buy his uniform. But if he'd had to buy his uniform and he was in business for himself, then that would be non-deductible because he could wear those anywhere, unless his employer specifically said, you have to buy your uniform and you cannot wear our logoed shirts anywhere but work.
Okay.
So this applies specifically to like airline attendants and pilots, right? They generally buy their own uniforms and they're usually pretty fancy.
Yeah.
And most airlines prohibit them from wearing them anywhere except for work for good reason, right? They don't want them to go represent Delta at the nightclub.
Right. So
that's the case where it's deductible because they bought them and they're prohibited from using them. So that might be something for you. If you have a salon and you have a uniform and you require your, the people working in the salon to wear that uniform, one way that you can make sure that uniform is deductible for them is to say you can't wear it outside of work. That now becomes deductible for them.
Awesome. Okay. I've also heard conflicting things on this too. As a nail tech, your body is just, I swear, in pain a lot. I have to get regular massages and chiropractic to even just be able to make it through my weeks. Like by the end of the week, I'm just like my neck, my back. It's a painful job. Let's put it that way. Are those massages or chiropractic appointments deductible?
Yes. So the standard for any deduction in a business is whether it's ordinary and necessary. Okay, that's the legal standard, ordinary, necessary. Ordinary is just in relation to other people in that industry or other businesses in the industry. So in other words, if it's normal that nail techs have back issues, and if it's relatively normal that they need a massage once a week in order to deal with those issues, that's kind of an industry regular thing, then yeah, that's ordinary. And of course, and necessary, ordinary, necessary. So necessary is just simply, do you need it? Well, that's an easy one to cross, right? I mean, that know whether you need it because it's your body. So yeah, they could be deductible as a business expense. I'll just say this: if you have employees, if you're a nail tech and you have employees, and you go get yourself a massage, you pay for your own massages, but you do not pay for your employees' massages, then you might run into a problem.
No.
Because if it truly were ordinary and necessary in your industry and you're employing people, but not giving them the thing that's ordinary and necessary, then the IRS is going to say, it's not ordinary and necessary enough for you to actually provide it.
Right.
It sounds like a personal expense to me. You're just buying it for yourself. Kind of like steel-toed boots. If I'm a construction company and I want all of my guys to wear steel-toed boots, I might want to buy them all steel-toed boots.
Yeah. Yeah.
Right.
Nice.
If they're all employees.
Okay.
So just, again, most nail techs don't have employees, so that's not an issue for most of you. And sure, deduct it as business expense. But for those that do have employees, watch out for that. Don't go make the argument that this is an absolute necessity for my profession.
But then you don't provide.
But I don't give it to my employees. I mean, first of all, you sound like a scumbag if that's your argument. But second of all, you're going to run into legal problems.
Right.
So.
Awesome. Well, I mean, I think that is all I had written down. Can you think of any other tips and tricks or anything that maybe we should be aware of? Make sure we're doing, not doing. What is
Sure.
else?
Well, I'll give you a kind of a very quick rundown of a few things you should be looking at. We mentioned S corporations early on in this interview. I think it's something that most of your listeners should look into. It's not going to be right for every one of you. Okay. If you're making very, very little money, if your net income every year is close to zero, it's totally irrelevant because this is a tax saving strategy and that ain't going to save you any tax. You don't have any tax. But if you're a successful nail tech and you're making 20, 30, 40, 50 or more a year doing this, then an S corporation, you probably want to look into it. You could probably cut, but let's say you're making a net of 50. I know that's doing pretty well, but if you're making a net of 50, you're probably going to save yourself $3,500 in tax every year by going with an S corp. Okay. So look into that.
Absolutely doable if their numbers are correct. If they're charging what they should charge,
yes. No, it's doable. No, I understand. It's very doable. And some of your listeners are going to do that.
Oh, absolutely.
But a nail tech being a nail tech is a lot like being a realtor. There's a lot of nail techs and there's all sorts of people in that industry, right? There's people who are doing really well with it.
Yep.
And there's people who are kind of dabbling in it.
Yes, exactly.
And the dabblers are not making 50 grand.
Right. Exactly.
In fact, they might not be making anything. Yeah. They might want to reevaluate their dabbling.
Yeah.
All right. So S corp, the other thing to look at is of course a retirement plan, like a solo 401k. Look to the future. That could save you some money now. And of course, put away money for the future. We talked about a home office. We talked a little bit about a vehicle. The one thing we didn't mention about the vehicle is the log. Make sure you have a contemporaneous log. That means a log that you keep in real time that records dates, distances, and usually you use distances by recording the odometer reading.
Okay.
So date, odometer reading, and then purpose, right? Purchasing supplies, going to the bank, traveling to the salon, if you have that home office, right? Just record the date. By the way, you can do that in an app. You don't have to do it by hand. There are apps that will do that. A few of you might have children, and for some of you, it might be worthwhile finding a way to employ your children and essentially use their tax-free earning potential, which is over $12,000 every year, using their tax-free earning potential to reduce your own taxes, right? And that's a strategy that you probably want to talk to an advisor about if it makes sense for you. But you might think about that. Oh, one thing to be aware of the next 2 years, 2021 and 2022, is that business meals are now 100% deductible. It used to be that you could only deduct 50% of business meals. But now they are 100% deductible for the next 2 years. And the last thing I would say is this: if you lost money anytime in the since 2018, 18, 19, or 20, if you lost money, you may have had what we call a net operating loss, which is a tax term. It just means that you essentially lost money. And that loss for tax purposes is available to apply to income in other years. Normally in future years, you had a loss this year, we can carry it forward to next year. And if you have income, then it offsets that income. Well, for 18, 19, and 20, you have the ability to carry back the loss, to take that loss and go apply it to 2005 years ago. So 2013 and 14, and then forward 15, 16, 17, which could get you an immediate refund from the IRS, right? Because you're offsetting income that you paid tax on in the past.
Huh.
So doesn't apply to maybe a lot of you, but for a few of you that where you had losses, that might be useful. You probably need to talk to a professional to get the actual numbers, but it could be useful. I mean, you might be able to carry back a loss and get a $1,000 refund or something from 13. So
nice. Oh my goodness. Anything else, Ben?
Nope. I think that's good. I think we did it well.
I think this is great. And I think this is going to help a lot of people. I really appreciate your time. I think this is just so knowledgeable, and we all could use a little bit to do a little bit better on this kind of stuff. I love the idea of the app. I think that's going to make life easier. Again, where can they find you if they want to reach out to you? You said you don't have to be here in St. George, Utah to use you as a, consultant or whatever. Like, where can they find you at?
Yeah, probably the easiest thing to do is just go to etrendsgroup.com. Up on the top of that page, there is a, like a booking link, like schedule an appointment link. You can click there and you can look at my calendar and schedule an appointment with me. That appointment can be on the phone or through Zoom or live, whatever you want. But certainly if you're not in St. George, you can book through Zoom or the phone. We can talk.
That was easy because that's what I did, folks, to get him on the podcast today. And it was really easy. And again, Ben, I just really appreciate your time, your knowledge, and for agreeing to come on here today.
Not a problem. Thanks for having me.
All right, guys, thank you for watching this episode. Please subscribe and share with your nail tech friends, and hope you got something out of it today. And as always, tribe up and slay your day.